So the budget just got announced, and of course, we'll be talking about the budget in this particular episode. But Nikhil Kamath of Zerodha has a lot more to offer. His years of experience trading in the stock market, his years of experience just learning about the world of finance and economics. That's what this podcast is about. Remember, the new season of the Ranveer show is much heavier than all the episodes we've done till this point. So if you don't want to consume the entire podcast, just watch the highlights on our new YouTube channel, TRS Clips. And of course, remember to follow us on Spotify. We're a Spotify exclusive, which means that every episode is available on Spotify 48 hours before it's available anywhere else in the world. This is Nikhil Kamath of Zerodha on the Ranveer Show, breaking down finance the way he sees it. I think you money-minded folks and you finance-oriented folks will have a lot of fun listening to this episode. I do recommend that you take notes. Enjoy yourselves. Mr. Nikhil Kamath, welcome to the Ranveer Show again. How's it going, brother?
Good, Ranveer. How's it going? How's everything in Mumbai?
Good. I'm glad to have you on the show once again. The first time you were here, it was sort of our season 1, which was much more about who you are as a person, what you've done. Season 2 is about what's happening in the now, both in your life and in the world. So before we get into the finance news oriented section, because that's the theme of this particular episode, who better than yourself to update, young folks about what's happening in the world of finance. But before that, I want to talk about generally what the last year has been like for you, because knowing you on a personal level, you're someone who's very self-improvement driven, and you're someone who's kind of in that search for peace. And I feel those elements are even more important than what's happening in the world nowadays. So what's up?
Yeah, so last year has been good, interesting, many victories and losses. But I would say net, everybody in our ecosystem has kind of benefited from the last 2 years of a bull run in equity markets ever since the pandemic. We have been beneficiaries of that. We've gotten lucky in broking and asset management and all that we do. And it's generally been a good time for us. So nothing to complain about. On a personal front, things are better. Things are more peaceful than they were. I think these really big peaks and troughs are the problems in life, right? Like one has to really work on mitigating the emotional reaction that comes with it. But it's been fairly stable for a while now, which I like.
No, I hear you. How did you handle the whole situation with Vishy Anand? I know that it got a little fishy in the middle. And knowing you, I understand the place you came from. You're a fun guy. You like pranking around a little bit. But how did you handle that whole angle?
Well, not very well. I think I kind of should have reacted in a manner different to what I did. But net, it's okay. I've spoken to him, and we've never had any real issues with each other. And he's a great guy, and I've always found him very intriguing. Probably one of the brightest minds to come out of India. So full kudos to him, and I hope to continue to retain a friendship with him over the long term, and it looks like that'll happen.
Yeah, we had him on the show, and I see why you two would get along. Very similar energies. What I do know is that the last year, because of all these lockdowns, a mentor to me, Zakir Khan, actually told me this. He's like, lots of people are stuck at home and they're looking for people to project their anger upon. And he just told me to be careful. And I also got into a lot of trouble last year. And I remember meeting you right after this whole situation. And that's what I told you as well, that bro, I think this is just youth anger that's being directed upon you because of Zerodha being in the mainstream. And generally, I think people just don't love other folks who've made it as big as you have in life. So you become an easy target. That's how I look at it.
Yeah, but I think, in a way, it's a good thing. Like all these big moments in your life where, you're popular for the right or wrong reasons. I think it teaches you a lot. Even if you were to consider it a failure at some level, it makes you better prepared to deal with it the next time around. I've had like 3 4 dramas in my life, like really big ones. So the fifth time it happens, I will deal with it better than I did the first time, or the sixth time it will be better than the fifth time. And from that perspective, all these really big emotional events, I think they kind of like get you to evolve a little bit faster and become more efficient at like kind of coping with them in the future. So I think it really helps you grow as a person emotionally.
Yeah, I think that's what entrepreneurship is in its core. You gotta kind of jump onto the next level, and problems are always gonna be a part of the game. But last question about this whole phase. You spoke about having learnings from, say, a recent tough time you had, probably over the last year. So, what was your big learning from the last year? Mine was that your work will never appeal to everyone, and your work is kind of only going to appeal to the people who are on the same frequency as you. So that was my big learning. How about you?
Maybe that my wins will not last, and neither will my big losses. Everything passes. Something great happens in your life, professionally, personally. You kind of like rejoice for a little bit of time, and then it kind of goes away. And the same with the loss. It feels like the world is ending and there's no tomorrow. But when you look back at it in a year, you're like, you kind of overreacted, and you should not have given it as much mind space as you did when it was happening. I think we're all. It's not easy to take yourself out of that situation and think like an objective outsider, but being able to do that, I think, is really good.
Mm, I hear you. So now that we're done speaking to all the core TRS listeners who love self improvement and emotional health, let's talk for the people who are here for you only, which is all the finance geeks and everyone who wants to be updated on what's happened in the world of finance. So this past week, the budget was announced for 2022. And I'm sure you've gotten a zillion questions about the budget. So I'm not going to ask you all the cliched questions. What I will ask you is that for someone who's living under a rock, who doesn't know what went down in the budget, how does a Nikhil Kamath look at it? You're at the center of the world of finance. So what's been up? What's happened in the last week?
Yeah, so let me first take it from an investor trader standpoint. What we are hoping for from the budget, some things we've been asking for a long time. I'm going to put myself in the investor bracket and talk like that. Uh, there's something called STT, Security Transaction Tax. For I don't know how many years now, people have been kind of like paying this indirect tax. It's paid when you make money or do not make money on a trade, but you still pay it. And it's about 1,800 rupees per crore of turnover, and you pay it only on the sell side. But what people fail to realize is about 80-90% of the volume of trades in India, or the turnover in India, happens on the derivatives market, where there is leverage inherently. So somebody with 1 lakh rupees is taking positions worth 5 lakh rupees. So it's not hard for somebody with a couple of lakh rupees in his account to maybe do a few crores of turnover a day on a notional basis. What happens with STT is it makes the ecosystem inefficient. Say, for example, I'm trading Nifty futures or Bank Nifty, which are the most common contracts. If I were to enter and exit 10 times in a day or 20 times in a day, uh, if I were to end up paying as much as 20 points in STT alone, for me to then break even, I'll need to like capture 20 points of Nifty just to be like, level, 0 0 kind of thing. So it kind of makes it very hard for speculators, a lot of day traders, people who are doing this full time for a living, to remain profitable for a long time. Uh, the ecosystem, in some ways, the government, we all always kind of frown upon these speculators with high leverage. But one has to understand these are the guys making the market for everybody. They're reducing the impact cost. They're making it easier for foreigners to come into the country and invest. If I'm a foreign fund and if I have to buy 10% of a certain stock in India over a 1 month period, if not for these people, it would be a lot more inefficient and the cost would be significantly higher. So we need these people, and we need to support this kind of, this category of people who are doing trading full time for a living. STT was implemented when Chidambaram kind of did away with long-term capital gain tax, but now we have LTCG and STT, so it kind of doesn't make sense. That's something I think everybody in the industry has wanted for a long time now. I hope it happens in the future. It did not happen on this particular budget. The second thing is again focusing on these full-time traders again. Derivatives are taxed at the max income tax rate. And in many cases, people need derivatives to hedge their portfolio, build a better risk reward profile, create a more robust trading portfolio by using, things like maybe you're writing covered calls, or maybe you're running strategies which reduce the underlying risk. And this shouldn't be discouraged with such a high tax rate, especially when on LTCG you're only paying 10%. This is what we were expecting from an investor trader standpoint. Neither has happened, but that's okay. And maybe in the future it will. If I were to go back and look at it as an entrepreneur, as a businessman, taxation in India is really high today. If I'm a company and I'm the promoter of the company, today if I make 100 rupees of profit, I pay a corporate tax rate of 25 rupees upfront. So I'm left with 75 rupees. Now let's assume I want to take out money and buy myself a home. To withdraw the 75 rupees which is left as dividend distribution tax, I need to pay another 35.8% tax on it. So it makes my net effective tax rate about 52 rupees. And this is notwithstanding stamp duty and STT and all the other taxes like a business guy or somebody focused on the finance world might have to pay. This is bad. Taxation at such a high level discourages entrepreneurship. If you were to go back in time, there's many people, politicians across the world who have run this experiment as to what the ideal tax rate should be. I think Nixon did it, JFK did it. I think during JFK's era, at one point he dropped tax rates down to 16% from different rates. They were at 50 at one point, 40 at one point, 30 at one point. So when he went from 30 to 16, what he realized is the incentive to evade taxes became so small that actually more tax collection happened. More people came out and paid tax. So it's a bit counterintuitive, but at the right level, more people will come out and pay tax. And especially in a country like India, where 1% of our population pays tax, and there is a big part of society that should be supported and all of that, but there are very many people in India evading tax, and hopefully bringing down the tax rates to more reasonable levels will kind of incentivize these people to come out and pay. So from that end, dividend distribution tax, again, nothing changed. I hope it happens in the future. They removed the surcharge, they capped the surcharge on private companies' long-term capital gain tax. So what that essentially means is, a lot of people in our ecosystem, right? Kunal and Sachin, and so all these startup promoters or promoters of any kind of companies in India, which are, if the promoter is getting an exit, he would earlier have paid a long-term capital gain tax of 28%. Now, because of the cap and surcharge, it comes down to 23%. This is good because we were losing a lot of entrepreneurs to countries like Singapore, jurisdictions where tax rates are a lot more favorable. Like Singapore does not have capital gain, right? Even on salaries and incomes, I think the max rate they charge is about 17%. Like Dubai did not have any kind of tax up until they implemented VAT a few years ago, and I think last week they came out with a corporate tax rate of 9%. So bringing that 28 down to 23 is a great step in the right direction. It will disincentivize many people in the ecosystem who were considering relocating to better tax geographies. So that's another thing. Another big thing that I think the budget was capex focused, which is good. The government intends to spend more money next year. This is generally a good thing for equity markets because more consumption, more spending, be it on infra or anything, will generally boost a lot of stocks in different sectors. The government intends to, if I'm not wrong, spend something like 39-40 lakh crores next year. We know how they will collect 24-25 lakh crores. How that deficit of 15 lakh crores will come, where the government will get it from, what rate will they borrow at. There's a lot of ambiguity there. I think we'll have to wait and watch. It's even more, one has to be more curious because even the divestment number this year is very, very tiny compared to what one would have assumed. People were thinking 2.5 lakh crores, but it's only around 60-70,000 crores. So one really has to wait and watch what will happen to that 15 lakh crore deficit number and how the government goes about getting that.
What's your hunch about where it'll come from? Like if you had to guess.
I think borrowing, both domestically and internationally, it'll probably come through that. Our fiscal deficit number is, going up. I remember a time, like not too long ago, when we would look at a 4% fiscal deficit and be like, that is high.
Can you explain the term fiscal deficit? Because we have also TRS listeners.
Yeah, so a certain amount of goods and services are exported from India, for which we get foreign money, and a certain amount is imported into India. The difference between the two is the deficit. So say, for example, these numbers are not right. I'm just giving you an example. Say India and China does trade. India exports, sells maybe like $50 billion worth of stuff to them, and we import about $100 billion from them. So that means the deficit is $50 billion.
Basically the money you're making from exporting things, like the net money you're making from exporting things.
Yeah, the net money you're making or losing, one or the other. So I think, not long ago, like it used to be like 4% and it was a big deal. Like why is it so high? Now I think they're factoring it for it to be at 6%. But that since that money is going towards infra projects and development and all of that, people are not really contesting it too much. It'll be interesting to watch what happens. Broadly, sector specifically, I think they did something good around education. They increased the budgets by 16 or 17%. Nothing really came for healthcare. One thing which was noticeable is they kept saying drone, right? Like a bunch of times. We had invested in a drone company recently called Omnipresent or something like that, and we're curious. We've been looking at that sector a little bit more closely ever since we got involved with that company. It'll be interesting. Then what else happened? This memory is so short-lived, right? Like budget was like Tuesday, and then by Wednesday it was like budget 2 times instead of 5, and by Thursday you're like, what happened? Did anything really change? But substantially, I think these are the things which changed. Nothing materially changed outside of this.
So I feel a finance person looks at it one way, and you just gave us the finance person perspective on it. And then the mainstream and media and social media specifically look at it slightly differently. At the center of social media, there's been talk of crypto, of course. And I know you have some strong opinions on crypto, both you and Nithin. I'd first love to know your general opinions on crypto, and then your opinion on all the crypto-related announcements that came from the budget.
Yeah, sure. Let me preface by saying I am no crypto expert. Okay, like I've been looking, commenting, trying to learn about it for many years, but I'm still like no expert by anybody's measuring stick. I'm not. But I think what they're doing is confusing. When the parliamentary session was going on and she said, what did she use? Virtual assets are going to be taxed at 30%. So I looked at the document. The definition they have used for virtual assets is really broad. It's like, if I send you a picture on your phone of some kind of a video of something I've done and I charge you some money for it, even that falls under virtual assets according to their definition, I think. Or that's my interpretation of it. The crypto guys are always, half glass full kind of guys, right? Like anywhere that crypto is said by a government or somebody, a figure of authority, they're like, this is good news. At least they're acknowledging the fact that we exist, and they will regulate in some form in the future. So they went in that direction. All the crypto exchanges, the big crypto guys, they thought it was good for them. But when I look at it, for a crypto trader in India who was trading on listed exchanges in India, 1 month ago, if you made 100 rupees of profit, you kept 100 rupees of profit. Now, if you make 100 rupees of profit, you get to keep 70 rupees of profit. So I don't really quite understand how it is beneficial for them. Also, that 1% TDS on transactions, I think it makes it harder for the higher frequency traders, the market makers, for all of them to operate, because they can't really pay that 1% TDS every time and be monitored at that level. So what I suspect will happen is the market will become less liquid very quickly for a short amount of time. Like if you went to, if you tried to buy a certain crypto at $100 and your orders got filled at 101 up until now, maybe in the really short term it won't be 101, but it will be 101.5 or 2 because of this TDS thing. She later came and the finance minister later came and clarified that this is not the crypto bill. We have not legalized it. There will be a crypto bill which will talk about legalization and the regulatory aspect of it. So nothing materially changed, but in the current form, if things were to continue, I think one interesting opportunity opens up. Taxation on publicly listed equity is 10% LTCG. Here they're taxing people at 30%. I don't know if you've seen companies like MicroStrategy in America, where their main business is no longer their main business, but they're a proxy or a euphemized version of holding crypto assets, and people buy into the company in order to have the crypto assets that the company has. So somebody might well open companies which are publicly listed tomorrow and give people the benefit of 10% taxation, whilst their only business is investing in digital assets. And that's a nice arbitrage play, right? Because here you're paying 10% and there you're paying 30%. So it's there are many nuances to it. One will really have to break down the numbers and figure out what happens in the future. But on the face of it, I think what materially changed is someone who was making 100 rupees 1 week ago, whenever this bill is active, will now make 70 rupees. I think and the impact cost will be a little bit higher.
I liked what you said about how a lot of crypto folks look at it as look at any situation in the crypto world related to governments as positive. We've had a lot of crypto folks on the show, and being an engineer, even I feel super positive. My whole generation feels super positive about crypto, but I actually want to hear the glass half empty version of it. In terms of you're someone who's made a lot of money in the stock market. I know for a fact that, if you play the stock market game right, if you play the private equity market game right, you can actually make higher gains than the world of crypto has made. So people need to know that, firstly. But secondly, what is your opinion on cryptocurrencies in general? Whether it's Bitcoin or Ethereum. I know you've studied it for a few years. That's longer than most of us have studied it for. And the fact that you're saying even you don't understand it, despite knowing so much about the world of money, it just makes me want to question that situation. What's your take on it?
Honestly, it's constantly changing. Like what I thought about crypto maybe 1 year ago changed 6 months ago and is changing today, and it will constantly evolve, right? It's such a fluid concept. Off late, I've been talking to people in the crypto world, and they've tried to they've been explaining to me how proof of work versus proof of stake and proof of history works, and the mechanisms behind cryptos, and how a lot of different nuances work, which I did not know earlier. So I think one thing I can gather from people I've spoken to is nobody is really talking about it as a currency anymore, like they were 2-3 years ago. Everybody treats it as an asset today. Many people compare it to gold. I have watched debates where there is somebody arguing for gold on one side, somebody arguing for crypto on the other side. Valid arguments all. I personally find myself favoring the side of gold, favoring the more kind of tried and tested means of allocating money, just because of the history associated with them. These are asset classes which have been around for thousands of years. And the one thing one cannot deny is, there's everybody has attempted alchemy, right? Every king, ruler, emperor, at one point or another has tried to make gold out of something else. Maybe there is a way to do it. Maybe nuclear fusion has some byproduct which is gold, but it's a lot more expensive to produce gold in that manner than it is to mine gold. So the price that gold is trading at today, compared to the price that the amount of money it takes to mine it, dig it from the ground, and process it and all of that, is not considerably different. So there is some amount of raw ingredients going into the process of creating the end product that is gold. Just for that reason, I do not think the value of gold will can ever depreciate in the manner that the value of a cryptocurrency can. Like maybe the Bitcoin can fall 90% in one day because of some inadvertent, some weird event in the future. I don't think that can happen to gold. And for that reason, I really like gold. I've been looking at gold for a long time, and in terms of a hedge against inflation, it works incredibly well. If you look at it from, what the median home price in America was in the 60s and how much gold you required to buy a median house, let's say, for example, it was 10 kilos. In the 1980s, 20 years post that, you probably needed 18 kilos. In the 2000s, you maybe needed 15 kilos. And today, you probably need like 14 kilos. So gold has always been a good place to retain wealth. And in my experience, there's enough precedent for me to say that. When it comes to cryptocurrencies and Bitcoin, Ethereum, and everything else that is popular, my little bit of research, okay, we tried to figure out who actually owns. Let's talk about Bitcoin. Who actually owns this asset class that everybody is talking about? So we looked at companies with large holdings. We looked at individuals with large holdings across the world. And we arrived at a number that about geographically, about 85% of the Bitcoin in the world sits in America. That number is probably increased after, China having gone against it and Russia having gone against it and, Kazakhstan and Ukraine and all of that. So I would assume that 85% has become even more. We talk about this as a currency which is democratizing in a manner, but when you look at it, I think it's the same like a couple of hundred people who have access to the vast majority of this currency, or they've kind of collated it with time. That argument doesn't hold true for me either. Then it's just there are so many moving parts, Ranveer. I have to figure out should one buy and why one should buy. See, if I were to tell you the top line thing that I think with crypto, I'm am I going to lose out so much by not holding it today versus taking the risk when it's a regulatory gray and the volatility associated with it, the fact that it has rallied as much as it has and all of that. I'm more on the side of, it's okay. You don't need to be a part of every party in town, and maybe this one is not for you.
Do you own any crypto?
No, zero. We can't. See, the thing is, we're so regulated as a business, right? From everybody, from RBI, from SEBI, and we are under a microscope all the time, because as we have scaled, we've had very many people who've been kind of who have lost a lot of business because of us doing the same service at a much cheaper cost. There were brokers back in the day which charged 2% a transaction, and we charged 1/99th of that or something like that. So we've always we probably have a lot more compliance and governance checks than anybody. So as long as they don't totally legalize it in the country, I would never even flirt with the idea of ever buying a crypto coin.
Wow. Okay. When it comes to crypto, so last week we had some smart people on the show. We had this econ grad, we had Ayush Jaiswal from Pesto, and I spoke to them about this concept of money. Now, again, I'm speaking to the TRS listeners here. Basically, the value of money is because of the value of gold. As in, like when I'm giving you $1, I'm saying that I'm giving you $1 worth of gold. I mean, at least that used to be the case. Now it's I'm giving you $1 worth of a dollar.
Yeah. Now it's just debt. Like that used to be the
Yeah.
case before. Like I think, the gold standard existed up until, like, if I'm not wrong, again I don't remember, but 1971.
70, yeah.
Up until that time, every central bank across the world had to show how much gold they have in their reserves, right? It kind of like mutated from there to a point where United States held everybody's gold, or a lot of countries' gold, whoever were part of the pro-US group. And 1971, Nixon was doing two things. He was trying to send somebody to the moon. Cold War with Russia. They were on this crazy race. Who will go to the moon first? And they were fighting a war with Vietnam on the other side. So he came out and he said, on a temporary basis, we will not show you how much gold is in our Federal Reserve. So when he changed it, it was temporary. It's just that people have not gone back to it. Ever since then, it's this arbitrary thing, right? Like we treat the US dollar as like a place to hide when things get risky in the market. We all believe that it can never fail. But if you look back in history, people thought about the pound in the same way. And in the 90s, George Soros kind of like went against the pound and beat it down, right? Like anything can happen. The amount of money these guys have printed in the last 18 months out of thin air essentially is more than all the currency US markets have printed ever in the history. So with that much dollar, will there be a considerable serious threat to the dollar at some point in the future? I would say very possibly.
So, okay, I'd love for you to draw a dystopian scenario. Firstly, again, starting from the ABCs. So, early on, the value of your currency as a nation depended on how much gold you had in your federal bank. Then in 1971, when Nixon announced this, they said that
There was one more scenario. It was called the Bretton Woods System. So for a while, we went on this system across the world where all our currencies were pegged to the dollar. So there was a Bretton Woods meeting. People sat down and they decided, "Acha, you're the Chinese renminbi. The dollar is X. You can be 5% plus X of the conversion ratio, or you can be 5% minus X, and you can't drift outside of it." So we had the Bretton Woods system, we had the gold standard, and then we have the fiat currencies, and essentially what you're thinking of as currency is debt, government debt.
Okay, could you explain this a little more? If you were to explain it to a 10-year-old, how would you explain it?
Yeah, sure. So the concept of fiat money, okay, this is quite like I think the people who kind of like created the concept, who look at it in its current form today, will not understand it themselves, right? Like it pretty much makes no sense. How do I explain it?
Maybe using metaphors. Metaphors are the best way to explain it.
Yeah. So let's say the US government is earning 100 rupees a year. They're spending, let's say, 300 rupees a year. This balance 200 rupees is coming from somewhere. They sell debt. The government takes debt. They call it treasury bonds, or depending on the duration of the debt. There are many different kinds of debt in the US. They'll give you 1.8%, 1.6%, whatever, for buying this debt for a 10, 20, 30, 40, 50-year period. And in turn, they service whatever, the excessive spending in the country is. They've been doing this for a long time. So, every year incrementally that debt pie kind of like piles up and it grows. Now, at the current point, the Federal Reserve kind of like, has so much debt on its hands that even a tiny tweak, like, to curtail inflation, they're saying of late that 6% inflation in America, right? If it were to go up to 7%, and they have to raise interest rates to above inflation to try and contain it, nobody knows what will happen to this debt, right? But uh, it works in a weird way because we all kind of okay, good metaphor. Think of it as a religion, yeah. uh, think America is the biggest religion in the world today. Okay, China is contesting it at some level. We are all devotees and followers of the US religion. As long as America, the religion, continues to have followers and people who have faith in it and perceive that they're a safe place for everything, like in terms of money and economics, they will continue to thrive. It's like a self-fulfilling prophecy. It doesn't matter. They can go out and print how much ever currency they want. Their currency will not depreciate. They can do fiscally really imprudent stuff. All of that will work as long as the followers, who the rest of the countries are, continue to buy US debt, continue to kind of like not contest the dollar and stuff like that. That's actually a great metaphor even for cryptocurrencies. I think Bitcoin is a religion. These currencies gain strength from the size of their followership. What Bitcoin is today is because of all the early adopters and followers who are so devoted to it, and like constantly championing the cause. And I think that gives it the strength. Tomorrow, if there is a new cryptocurrency and it has more followers, that will become the new religion.
Got it. But isn't that like kind of the core definition of money, that all of us got together and said, okay, these notes with these numbers and faces printed on them are worth something. So when enough people believe about it, automatically it becomes money. Therefore, on a more macro scale, that's what you're saying about America, where every other country, leaving a few countries, like probably the enemy countries, say like China, Russia, whatever, are saying that no, that's the country which is our gold standard. But you're saying, and this makes me dial back the conversation a bit. You said that things might implode there. So that's where I ask you to draw out a dystopian scenario as a finance professional. What will that be? Is it possible to predict a timeline? And say if it does happen, say if that all that stuff implodes, what will be the outcomes of it for the United States of America and for all the other countries which say that that's our religion?
Very hard to picture it. It'll be scary for sure, right? Like we all have so much US debt. Like the Chinese used to have the largest. They've been offloading in the last 1 year, and now Japan has the highest US debt. So these guys will not get their money back, obviously. In turn,
One second, when you're saying US debt, it's basically bonds that we have bought from the US government, like the Chinese government will buy bonds from the US.
Yeah.
Okay.
like I was talking to you, those bonds which give 1.7, 1.8%, right? Like stuff like that. So these countries will suddenly not get that money, which was a receivable to them for a long time. In turn, they will not be able to service their own internal debt, and many implications, right? It's a crazy scenario. What happens? The way the world is going, it looks like we're creating two blocks, right? Like the West, India is on the side of the West. On this side, you have Russia and China and Iran and a bunch of other countries which are natural resource rich in their own way. These countries like Russia and all, suddenly they will do so much better because crude has rallied like 100%. Like, if one were to predict, like, it's such a meta thing to think, but because of the Russia-Ukraine fight, and they've not actually started fighting really, but all the narrative around it, the biggest beneficiary in turn might also have been Russia because they're such a big oil exporter. That sense that there might be conflict drove oil prices up, and they benefited from it. Like, when you think about it, like it's so complex. Say the world of oil, for example. We have OPEC, and we have this governing body which defines supply and how much has put out and how to control price and all of that. But if tomorrow one were to go out and realize that Russia kind of like did a lot of this to just get oil prices up, and they have a lot of sanctions, and there isn't much other revenue coming their way right now. It would be incredible, right? It would be such a unintuitive thing to think.
Again, coming back to India, what does this mean for the future of our country if we are on that West block and say this happens? What will happen to our country, and how do you look at kind of the future of our country again as a finance professional, keeping in mind this budget, all the budgets of the recent past? Where are we going, from a geopolitical perspective and just from a growth perspective?
So, Ranveer, I feel like there is no way to really look that far into the future. I feel like we've been lucky, right? Like me and you, and the era that we're living in today. Like, we were not in the First World War in the 1900s or 1910 or 14 or whenever it started. We missed the Nazi thing. We missed socialism in a way. We were not around for Mao and Stalin and all these crazy people who have come about and lived around us. We've lived in such a friendly world. Like, even if you look at average age of people, like how long people live for, I think if you even go back like 78 years ago, people only lived for like 50 years. If you go back another 20 years, they would probably live for like 35 years. That was the normal term of somebody's life. We're in this very lucky place where nothing drastic has happened in the last 30-40 years that we've been around. I just hope and pray nothing drastic happens for the next 30-40 years. What happens beyond that? A, I'm dead. B, it is impossible to predict. Impossible. Like, I would love to fathom a guess and say which way geopolitical stuff will go, but I think nobody knows. I wouldn't be hard pressed in saying even probably the leaders of Russia or like America, they don't know themselves. They also have like one 5-year term or 4-year term, and then they're gone, right? I mean, there are exceptions like Putin and all that, but nobody really knows. It at the end of the day, it requires like 3-4 mad people to do 3-4 stupid things, and everything could go down.
Are you optimistic about the near future, like in terms of
I'm optimistic about our lifetime. Like, I'm optimistic about the next 30-40 years. I don't think much will happen. I hope I'm right.
So things will go the same way. Maybe, you could put an angle of philosophy into this and say that because of Shark Tank becoming mainstream in India, entrepreneurship will come to the forefront. There'll be entrepreneurs in India, lots of business creators, lots of job creators.
Hey, one thing, there's so much critique for, the BJP government and the Prime Minister and all of that. One thing you have to give them credit for is we have at the end of the day had like 40-50 unicorns in India, right? Like in 1 year. To have created an ecosystem where companies could thrive like that, to have created, access to capital has never been easy, right? Like 30 years ago, this was impossible, or 15 years ago, this was impossible. India has become more attractive to so many foreign investors at some level because of consistency at the top, at the center. And I think they have played a part in it. So, a lot of critique is passed their way. But this one thing, the stability that they've maintained in the last 10 years, I think 8 years, we have to kind of give them credit for that.
Yeah, which is why I've rarely heard anyone from the world of finance really critiquing the government in terms of their economic policies, at least. Like, I hear a lot of people saying exactly what you said. And, the realistic scenario is that there's no political competition to them. So it's likely that they will be in power for a while, which, from a capitalistic perspective, at least it means a lot of glory. If there were 40 unicorns last year, God alone knows how many unicorns will be built over the next 5 years. I personally feel that definitely content affects culture, and people are underestimating how important a role Shark Tank has played in making entrepreneurship a dinner table conversation. So for the kids who are 10 years, 15 years younger than me, dude, it's going to be so easy for them to get into becoming business people. It was so difficult for me to convince my parents. All my co-founders had trouble convincing their parents to get into business. And I'm sure that this is the story for so many young Indian kids. The big hope is that more people step into the world of business. But coming back to the finance side of things here, I asked the finance professional in you that is it correct to say that if a country creates more businesses and say we actually start selling to the world, Is it great for India? I mean, I know it's an obvious answer, but I'd love for you to detail that out a little more. Like what happens?
Yeah, of course. See, we've been fairly competitive in many industries, right? Like in India, I'm talking from a global standpoint. Take pharmaceuticals, for example, take IT services in India. China has been great at manufacturing for a long, long time now. Many things play a part in this, but the fact that cost of labor is significantly cheaper here in our country compared to the West plays a big part in it. That's why a lot of outsourcing. I'm not taking anything away from the skilled labor and all the efficiencies that we add, but at some level, people started coming here first, outsourcing their services to India because of the cost of labor. The Chinese, for a long time, people used to keep saying that the renminbi is artificially deflated, so they become more competitive. So, from one perspective, if India's currency were to depreciate, like it has been in the last 10 years, not so much in the last 1 or 2 years, but otherwise we lose about 4.5% to the dollar in terms of relative value. One could argue that further depreciation will make us more efficient from an export lens and make us more competitive in a global scenario. But I think, the big problem in India right now is upskilling labor, improving education. I think that low tier export that we do, as the country develops, will become less relevant. We will really kind of like, have to shore up our, kind of like the education system in India, provide really skilled services and high end, kind of like move up the value chain. I think that's the future for India.
So basically, if we focus on education, we focus on upskilling, you're creating a workforce for all the businesses that are going to be created over the next 10 to 15 years. And overall, like successful capitalists along with their teams will drive the growth of the country. That's basically a good case scenario for what you're saying. But in saying all this, I also want to highlight some of the negatives because this is season 2 of the Ranveer show. So we do it from a 360-degree perspective. So, I feel kind of one thing I've learned about looking at countries from a macro lens is that you got to perceive it like a business. You have things that are going right. You can be optimistic, but you've also got to focus on what the holes within the boat are. What are the holes that are supposed to be plugged? What can possibly go wrong? So, again, from the finance lens, what do you think are the problems that we're facing? And what do we need to fix?
If I have to put them in like a couple of broad categories, let's do like three or four. I would say inflation, unemployment, fiscal deficit. Yeah, I think these three are like probably, in my view, big problems of today. Uh, Inflation, people often don't realize. I was reading this book by Milton Friedman a few days ago. Very creative, colorful character, right? He was an economist who kind of like championed in a certain way the laissez-faire form of governance, where less involvement is better than more involvement and stuff like that. But he talks about inflation as a tax. When your purchasing power goes down. Officially, we think inflation in India is 6%, between 5 to 6%. Pragmatically, living on the ground in India, it feels like a lot more. Steel, copper, crude, all these commodities have rallied by 50, 100%, taking up the cost of, goods being produced in the country, and many, many other things are, so much more expensive than they were 3, 4 years ago. So inflation, like even if you look at housing price inflation, I think that alone is significantly higher than that 5, 6% number that we keep hearing. But if you were to consider inflation at say 10%, for example, you have to think that your purchasing power in the country is going down by 10%. Like if Ranveer has 10 lakh rupees in his bank account this year, he can buy maybe a car which costs 10 lakhs, but next year that same car costs 11 lakhs and you can't afford it with that same 10 lakh rupees. If you put your money in a bank FD in India today, you get 4.5% pre-tax. net of taxes, you probably make like 3%. With inflation being so much higher than 3%, people are effectively losing their purchasing power every year that money remains parked in their bank accounts. I think this will have many repercussions in the future. Once it kind of blows out of proportion and it becomes uncontrolled and it's rising quickly, the government will have to quickly move interest rates above the inflation rates. So let's assume inflation goes to 10, interest rates will have to become 12. We've been in this easy money scenario for a few years now, and so much borrowing has happened towards capex and other activity that it will become increasingly hard for these people who have borrowed to service that debt. But B, companies will then find it very hard to go out and borrow at 15-20% to grow their businesses and kind of like have any kind of capex activity. So inflation is a big headwind in my opinion. We've kind of like, I think we've spoken about the problem, but we have not really given it the amount of attention it is due for as big a problem as it is. The second thing I was talking about is unemployment. I think last month's number in India came at about 8%, which was the highest we have seen in the recent past. When somebody hears 8% unemployment, they think, "Acha, यहाँ पे 100 लोग हैं, 8 people don't have a job, 92 are working." But it's not like that, right? Like they don't consider people under the age of 15, they don't consider people over the age of 60, they don't consider, there are many more categories. You have to be educated, wanting to get a job, and like willingly unemployed kind of a thing. So when they say 8%, the real number is significantly higher, like many times higher, the actual unemployment on the ground. And geographically, it's very dispersed. So Karnataka, for example, or Maharashtra might have 2% unemployment, but say Haryana or Punjab might have 25%. Bihar might have a huge number. UP might have a big number. Historically, like if you go back in time, this is probably the biggest benchmark to when society kind of revolts. Like you were talking earlier about, in many cases, people going after people who are publicly kind of like have known to done well monetarily or financially. In a certain way, is testament to that as well, because a huge section of society is kind of not doing as well as they should be today. Like between us, like, we all are so lucky to have been born where we are born, to whom we were born, the fact that we had access to education, the fact that we could go to a school. I'm not saying anybody's affluent or stuff like that, but you still had the opportunity to go to school, you had the opportunity to go to a hospital and stuff like that. So we're that tiny lucky minority in the company in a way, and the vast majority of the country is still struggling on many of those domains. So unemployment has the potential of becoming a really big problem. The third thing maybe we can talk about is the birth rate. In society, every couple has to give birth to 2.1 kids for the population of the country to remain stagnant. In the recent census which came out, I can't remember all the numbers, but the headline number has gone below 2.1 in India. Karnataka, for example, is 1.7. I think Maharashtra is 1.8, 1.9. States like Bihar, UP are higher, closer to 2.8, 3, where the populations will continue to grow. But that whole argument about how India's population will continue to grow up and double is gone now. I think as maybe in the next 20, 30, 40 years, we will get to that point where population starts to dwindle. It's happening in China now. They removed the one-child policy, and now they're encouraging people to have 2 kids and more kids because it's become a really hard problem for them. The one good learning when it comes to population is, I think, from countries like Japan, who have lived this cycle earlier. When fertility rates go down as quickly as they have in India, you will have this 30, 40, 50-year period where you have a really big portion of your population which is in that unproductive age range, like between say 60 to 80, which needs to be supported. Uh, uh, the average age in India today has maybe gone up from 24 to 28 or 30, but when it goes to 40, when it goes to 50, or when you have this huge population which is not productive in society in the traditional sense, it will be a huge strain on the economy. You can't expect an older economy like that to grow at 8, 9, 10%. We've seen it in Japan in the last few decades where there's barely been any growth, right? So we might enter a phase like that. It has many repercussions for different ecosystems across, like, take real estate, for example. We were always told that limited resource, limited land, always increasing number of people, so the price of real estate will go up. Tomorrow, if the number of people is no longer going up or is going down, does that argument reverse? We expected urbanization to happen in India like it did in China. We use them as a benchmark in some sense. But does something change in the people's minds where, people are no longer as, I think farming is aggregating, right? That will happen. Like smaller farmers will kind of like fold in. We'll have bigger farms with more technology and equipment and all of that. But does that then definitely mean urbanization? I don't know. I think it'll be interesting to wait and watch. But this birth rate issue, I think will become a really big issue for India in the next 30, 40, 50 years. And it'll affect many, many industries. Yes, I would say these three things are, like probably on the top of my head, the biggest things to worry about right now.
So, I mean, I won't really talk about the third issue you spoke about because that's kind of out of our control unless we build biotech based businesses and it up in a Black Mirror way where we enhance human youth. But maybe let's address the first two realistic problems. The first one you spoke about, especially inflation.
Can I
Is
tell you
there
about the birth
Yeah,
rate
sure.
issue? There's this really
Sure.
interesting company called CRISPR in America. Have you heard of it? It's also a technology.
Yes.
They had won the Nobel Prize a few years ago.
Yes.
They're doing some incredible work. And I think, like, if anything can be done about a lot of the issues that we have today, medically, I somehow suspect some of the answers might come from there.
Could you give the ABCs of CRISPR for the audience?
Very complicated. I've like read about them. I own some stock in them. I've like been looking at them for many years. So this might be totally wrong because I'm no expert, but I think whenever you look at DNA, in between all the different stuff that is going on, there are some things which are common and some things which are uncommon, and they figured out a way to modify this at birth. And they're able to read it at birth, so they know what you're susceptible to and how to kind of tweak stuff in your DNA to make you like less susceptible to cancer or taller or more intelligent and stuff like that. I think the potential for that in the future is huge. It's a bad stock investment for me. I think I bought it at $110, $20. I think it must be trading at $60, $70 now. But outside of that, as a technology and the use case for it, I think is tremendous.
Yeah, let's see how it evolves over the next 10 to 20 years. But coming back to realistic finance conversations, because this is a finance podcast, Mr. Kamath. What about the inflation issue? Like, how does one tackle that? I mean, obviously one can't, but I'm speaking as, for the government. See, what does the finance ministry do about that issue going forward?
Well, honestly, a lot of the inflation issues across the world have been percolating down from the Federal Reserve printing money in America. So not like we have much control. If you go back to economic theory, there's a guy called John Maynard Keynes. He had the Keynesian model. If you were to take two contrasting viewpoints, right? Keynes believed in when things are not going well, throw money, helicopter money, pump so much money in the economy, increase consumption. that in turn will lead to growth in one way or the other. There was another guy, Friedrich Hayek, on the other side. Hayek always, was more err on the side of caution, the complete opposite of what Keynes was saying in a certain way. The world largely, the capitalistic world largely, or the democratic world largely, has followed the Keynesian model. And I don't know if there's a solution for it. I think, to make the cost of capital higher and to reduce liquidity from the ecosystem is probably the only prudent way to make sure it's in check. Otherwise, we'll go like the way of Turkey or something. I don't know if you've been watching what's been happening with Turkey, but it's like batshit crazy, right? Like Erdogan does not believe in increasing interest rates, immaterial of where inflation is at. So inflation could be well at 20, 30, 40%, but he still wants to lend money to people at nominal rates, like one-fifth of that. So inflation continues to go up. The currency has deflated by 70%, 60, 70%, and it's total chaos, right? Like, I don't think we can go in that direction. I think the reasonable world that we live in, India, the only tool they will really have is raising interest rates and reducing liquidity when inflation goes up. And I think we will see a cycle of that in the near future.
Got it. What was the second one you had mentioned? You had said inflation, the birth rate, and unemployment, right? Unemployment was. So have you heard of this thing called the Japanese economic miracle? It's basically after World War II how they bounced back, and I kind of studied it for a video that I wanted to write once upon a time. And what I figured is it was just highly effective productivity hacks that they used, but on a much more macro scale. So the government said that every business is going to follow these systems, and they were basically productivity hacks that you'll meet so many times in a week. You will try doing business with sister companies. You'll grow as an ecosystem rather than one company. Do you think that kind of where India is, we should be inspired by the South Koreas and Japans of the last 50 years and take things forward to take this 40 unicorns a year thing to 400 unicorns a year?
Yeah. I mean, it's interesting you say that. Adam Smith used to say that if we as individuals or we as companies, we all act in our own interest in a selfish way almost, together as a unit, we do better, right? Like, he was again a very interesting guy in what he believed in. But I don't know if the Japanese model will work for India. I think we are so big in terms of scale, and the problem is so acute that the only real way to kind of like do anything with unemployment is probably like really shore up education. A contrary opinion to that would be something like UBI, universal basic income, has to become a reality sooner than later. I think not just in India, but across the world, capitalism is like that, right? We want to move. See, socialism doesn't work, communism doesn't work, we know that. But we need to move from capitalism to some form of benevolent capitalism with not just benevolence, but also checks and rules in place, like inheritance tax and property tax, to make sure society on the whole is okay. Wealth disparity has become such a big issue today that if you were to go back in time, and there's plenty of precedent for this, right? Like if 20 people in a community of 100 people own 90% of the assets, the community can survive. But if one person holds 99% of the community's assets, the other 99 will go after him with sickles to take what he has away. I think we're going in that direction. We're kind of like crawling in that direction, and it is a real issue. But I think the only solution for that is A, taxing in a more efficient manner, and B, using that tax money efficiently to create a good model where people who do not have a job are still taken care of in a certain way.
Okay. So, Nikhil, before heading into the last section, keeping in mind this previous section that we've just spoken about, say hypothetically someone makes you the finance minister for a year, like, you know, Anil Kapoor and Nayak kind of situation for you.
Yeah.
But I'm not asking you the details, right? I'm not going to ask you like which policy are you going to create. Generally, what would be the 3 or 4 things in your mind in terms of, okay, these are the tweaks I want to make to take the country forward?
I would focus more on transaction taxes versus income taxes, because I feel like that 1% of the country which is paying income tax, I don't think you should burden them anymore. I mean, I think, this is not even the rich, right? This is like the middle class who are essentially getting a salary and paying most amount of their income as tax. I was doing some kind of a calculation, and I was like, if India were to abolish income tax and instead try to increase GST to make up for that, how much will GST have to go up by? And in my calculation, it was something like 25% or something. So if you're buying a car, it will cost you 25% more, but you're not paying any income tax. But net, I think what a positive result of that would be is not only that 1% will pay tax, but a vast not majority, but a big number in our country which has evaded tax, found ways to put that money in property and things like that. They will come under the tax net, and net collections will go up significantly. Maybe that's something to look at. Property taxes, yeah, definitely. If you live in America, in Connecticut, for example, you would pay as much as 200 bips, 2% a year in property taxes, right? Like if you have this large villa or if you have a mansion, you can afford it. Why not pay a considerable amount of tax on it? In India, that concept does not exist. Again, from the point of view of tax evasion, I think taxing property across the board will bring a lot more people under the tax net. See, there's a common narrative in all that I'm saying, right? I don't think the solution is to tax that poor 1% any more than we have already, but get more people to pay tax. I would say a very controversial thing that a lot of people will not like, but I think farm income has to be taxed beyond a certain point. I totally am on board with supporting the smaller farmers who are not doing well and need to be helped and all of that. But let's say the cap is 10 crore rupees. If a farmer earns more than 10 crore rupees a year, he has to pay tax. I don't think that hurts anybody. I feel like companies like Monsanto, like these huge agri-tech companies, there are cases in which they're earning 200, 300 crores of profit a year, but they're not paying this tax and they're using this exemption to get out of paying tax. And it just seems ridiculous to me. So from the taxation perspective, I would do everything. Also inheritance tax. I think there's precedent for that. The US has inheritance tax, UK has estate taxes, South Korea, Southeast Asian countries, everybody has it, right? The good thing about it is you pay inheritance tax once in your lifetime and you're not burdened with paying it every year. So it doesn't discourage entrepreneurship in a manner that increasing income taxes which are paid every year might do. Yeah, but the general narrative around taxation in my mind is to get a broader section of society to pay tax. See, beyond a point, you can't even blame the government for, a lot of the infra that we have and stuff like that, because if we have to face it, 1%, the tax that is collected is not enough. And, they don't really have the gunpowder to go there and go out there and really transform the country. So yeah, general message and narrative is around getting more people to pay tax and avoiding tax evasion.
So, Mr. Kamath, while I can go on with you much more deeply about these topics, I think we should do it in another conversation. And this conversation is heavy enough by itself, which is why we'll head into the last round of this particular episode, which is called Bombs of Emotion. Okay. And I've made it a point to kind of get sort of the emotional state of mind of all my guests captured in each episode. So where are you emotionally? But, keeping in mind the theme of this episode, I'd also like to ask you generally about the world of Indian billionaires, because I know that's the kind of circles you do have access to. So, what are people's emotional states of mind in those circles? Like, what is their reality like? And also, specifically in finance, dude, you're talking such hard numbers and, facts, figures. It's kind of like an intense world. So, how do you kind of handle your own mental health here? What is your state of mind like?
Yeah, firstly, the affluent of today, the ones who've gotten very, very lucky. I hang out with a few of them, the Bangalore crowd. This is more so true for Bangalore than it is for Delhi or Hyderabad or Bombay. But the level of conscious in a way, like how socially active they have gotten recently is tremendous. Like, I'll give you an example. Like, pick some friends of mine, for example. Take Kiran Mazumdar Shah, or take the tech guys who have done well, like the old Infosys group, Nandan Nilekani and Chris Gopalakrishna. And, we all meet up once in a while in Bangalore. These are incredible people who are so humble and so loving. And, they do so much to encourage and motivate people like us who are like much smaller and younger and stuff like that. The one common trait I see in Bangalore increasingly with time is these people never really uh, are focused on how much money who is making or what they're spending it on or what houses they have or what cars who drives. I think all of them are beyond that point, right? They really, really have this innate love for the city. It's like, Bangalore is a country of its own in our minds. And we have that common bond, and Bangalore is what binds us together. So I think that's one incredible thing about the city that I don't see in other cities. Like, maybe I don't know enough, but when I go to Delhi, Bombay, Hyderabad, Chennai, I don't see that level of affection and giving back to the city and stuff like that. We have a new group called YIPP. It's called Young India Philanthropy Pledge. So we are trying to get more people, not in their 50s but in their 30s, who have done well, especially in the tech world, to come out and give away a substantial amount of their wealth. Like we pledge 25%. We encourage people to do more than that, but we encourage people to start participating with the group. The projects we are doing primarily are around education now. We have this project in Karnataka which has just gone on the floor, where we're trying to improve 200 government high schools. So we're getting smart classrooms, improving toilet facilities, painting the school, trying to do teacher training and stuff like that. So many incredible people, Ranveer. Like, it's mind blowing. Like, I had a dinner at home last night for YIPP, so we were all sitting and talking and ideating what we should do next. And we had some very interesting people who came by. This guy Raj Nui, Indra Nui's husband, he runs this big philanthropic project. Him, the Give India founder, the Vedantu founder, and Prashant, the Axel MD. Uh, it's incredible to see how that ecosystem of the people who have gotten lucky in Bangalore is evolving. And I think it is super encouraging for the country. If that can be replicated and taken to other cities and other domains, I think the country will do incredibly well. Like, I'm not even kidding. Like, we're on a show and we're recording this and all of that. But when you meet these people, like people like Chris Gopala Krishna and all that, right? Like, these are people who are worth $4-5 billion. They are people who will be driving like a Toyota old, like 20-year-old car with no bodyguards and no nothing, and probably driving it themselves, and wearing some old T-shirt. And it's just such a good ecosystem to live and work in. Your when your idols are like that, I think things your priorities are kind of like nudged in the right direction. Yeah, so I totally, like, I'm like one of the biggest champions for the Bangalore cause, and I keep kind of like bringing a Bangalore wherever I can, and kind of promoting it.
Yeah, as I said, Nitin and you are like two real life Rahul Dravids. And that's the case with many Bangalore people that you meet. But how are you otherwise, man? Like in terms of how you looking at your own near future? And I'm not just asking you from a Zerodha perspective, but as a human being, as a man, what do you want next from life?
Yeah, so see, I think I've gotten the privilege. Uh, I'm in the position today where nobody reports to me. Okay, like I don't have any people to kind of like make sure they're doing their job and they're selling or they're doing this or that. I spend my time doing research, investment related stuff, and that has been what has enamored me for so long now, right? And I enjoy that. I don't like the whole being a leader, being somebody's boss kind of stuff in life. I would much rather sit in front of my trading terminal or like sit and read research reports and spend my time doing that. And by virtue of having gotten lucky, I think I have that privilege in life today where I can do that, and I spend my time doing that. So that has left me feeling emotionally a bit more fulfilled than I was maybe a year or two ago. I've had like many ups and downs, some being more public like than I would have liked for them to be, but these things have, I think, taught me to be more resilient. I'm in a weird way, I'm glad they happened because I feel more able to deal with issues in life today because of the stark issues I've had in my past. You know, if I were to pick who to go out for dinner with, if I had a choice of two people, one who has had like this super tumultuous life and ups and downs and has gone to jail and has like has probably had somebody die close to him and has probably gone bankrupt and all of that and has had many cycles, and the other guy is a guy who's incredibly intelligent and has won at everything in life and is probably the richest man in the world. uh, I would think picking the more interesting guy, the guy who's had the ups and downs, will be more interesting to me. It might be different to somebody else. I think the scars you bear kind of make you more interesting as a person. And I feel like uh, insecurities have gone down a bit. I'm like, I've always been a reasonably insecure person, but in the last year or so, uh, it has gotten lesser. Also, I feel with time, ambition is going down a little bit. Like, I'm not as ambitious as I was 5 years ago. I'm not as hungry, as greedy. It's not like I want to do 100 new things. I want to, like, right now focus on doing things that I like and working with people that I like working with. And I feel like I've earned the privilege to do that. And I think that is the biggest metric of success, for me. I feel like the freedom to work with who you want and work on the kind of projects that are interesting to you is what is most fulfilling. And I've been focusing on that, and I'm really liking it. All the new things which are like, doing them because they're interesting.
Yeah. You're one of the few people in my life where every single conversation with you, I learn something new. And it could even be a simple question like this in terms of, how are you, bro? And you'll still tell me something about yourself where I'll say that, yeah, I find myself in your shoes in some moments in terms of ambition gradually going down, all that. I have echoes of those thoughts already. So, one of the big privileges and blessings of my life is that I have the opportunity to talk to people like yourself who've had this wider range of experiences, man. So, I wish you all the luck, dude. Thank you just for entering my life in this very random podcasting way. I'm glad, deeply grateful always.
I have to add about you. You have so much positive energy, right? Like I keep telling whenever we catch up, I keep telling whoever, like I keep telling her, Ranveer has such optimism about everything he does, and it's good to be around you. Like each time we hang out, I feel like I wish I had a little bit of Ranveer's optimism. Like please give it to me from somewhere because I'm too pessimistic as a person. So it's great that you can be that way and authentically that way, not just on camera, but outside of camera and all the time.
No, thank you, bro. If I fail at everything I'm doing in life, I'll come to you and say, I'll be around you, dude. I'm gonna be a cheerleader. No. I'm kidding, dude. I think it's a defense mechanism. I had a pretty rough teenage and college phase, so I just learned to be like this. But I'm glad it works for me, and I love that our journeys have met because of technology. So thank you, brother, and I wish you more of everything that you wish for. So keep being who you are, dude. I know the pure person you are. So just keep being yourself.
Thank you. Thank you, Ranveer.
So that was the episode with Nikhil Kamath. I do want to know from you guys what y'all think of the new style of questioning, what y'all think of the new vibe of the show. Is it a little too heavy? Is it just right? I feel like we're building a community with TRS. I also feel that all the episodes up to this point was sort of education for that community. We've spoken about the ABCs of multiple topics. Now it's time to take that knowledge and actually dive into topics. So that's what season 2 is about. The new setup, all these new guests, all this new energy. Let me know what you think. Remember, follow TRS clips because the highlights of each episode are going to be on that YouTube channel. And remember to follow us on Spotify as well. Every episode's available on Spotify 48 hours before it's available anywhere else in the world. Let's build this TRS community together. Let's spread knowledge as far and as wide as is possible.